Assalamu alaikum warahmatullahi wabarakatuh, everyone. If you're watching this video in regards to halal mortgages, please don't. Watch Halal Mortgage 101 first, and then the Diminishing Musharakah Halal Mortgage versus interest mortgage. In that video, you're gonna understand exactly how an interest mortgage works and how it compares to a diminishing musharakah. And inshallah, considering that most of the scams out there regarding halal mortgages revolve around diminishing musharakah these days, doesn't matter in what country you're in, essentially, diminishing musharakah comparing to a regular conventional interest mortgage video is gonna help you the most. So both the links are in the description below, and I pray Allah Azza wa Jal protects you from being fooled into a regular interest mortgage when you're genuinely seeking a halal home financing option for you and your family. Please like and share the video with anybody that you know is getting or looking into getting a halal mortgage. Subscribe to the channel, be a part of this growing community, inshallah engage, hit that notification bell icon for any future upcoming videos. As I said, majority of the fake halal mortgage scams market their process as the halal so-called diminishing partnership or musharakah mutanakisa halal mortgage process, right? So in terms of functionality, both the diminishing musharakah halal mortgage and interest mortgage work the same way. So from your point of view, you make a down payment of 20% or 10% or whatever, and the financial institution goes ahead and puts up the remainder 70 or 80%. Their money is secured against the property. So if you stop making monthly payments, they'll sell your property, take their money back. Going forward, you make a monthly payment. A part of your monthly payment goes towards the cost of financing, and the other part goes towards ultimately releasing you from the need to finance the home in the first place. Meaning, inshallah, 20 years or 25 years, you're going to be mortgage free. And this is exactly why most Muslims like you get fooled into buying a regular interest mortgage when you're out there seeking a real halal home financing option. So the scam goes like this, and comment below if this sounds like you or you're familiar with somebody who unfortunately got into it like this. You asked your well-known imam, so it starts off at the mosque. You asked your well-known imam after Friday prayers for guidance on a halal mortgage option, and were introduced to someone as the main Islamic financing expert. ISNA, Cooper's Mosque, take your pick. Maybe you attended a 2-hour finance seminar at your mosque or an institute where you were explained the basics of Islamic finance in regards to halal mortgages, and the 3 most popular types of halal mortgage processes globally used, which are murabaha, diminishing musharakah, and ijara. The impression of high credibility and reliability was left upon you that these guys are not selling or promoting a specific company or product, and that you will for sure get a halal mortgage from them, or at least you're gonna get guidance from them. They have the solution. You feel even better when you learn that they have financed many mosques, musalla, and homes of many great imams, who you assume from your point of view that would have done their research, would have verified, and no way that an imam who is constantly calling people to the way of Allah, right, which is the whole reason why we respect them, would suddenly be promoting a fake halal mortgage option. Well, prepare for your bubbles to be burst. Companies and individuals will even go as far as to license their fake version of diminishing musharakah mortgage contracts to small credit unions and other private lenders to attract the businesses of the Muslim community, fooling those not well-informed financial institutions because they're not familiar with Islamic finance, right? That Islamic finance is just wordplay. That as long as you remove the word interest and just reword the contract that they spent millions and billions structuring with very expensive, credible law firms, that as long as you remove the word interest and just reword the contract having the same structure as the interest contract, it becomes religiously compliant. Literally taking a regular interest mortgage, rewording it to mean the exact same thing using a dictionary and selling it to you as a halal option. Wonderful. Don't underestimate the severity of the scam. They can even show you a contract that states 0% interest in the word itself on a home that they financed using a bank or credit union or any conventional financial institution or entity. Doesn't matter. Point is, whatever it takes to get you to be completely sold. And you do get sold. Because you go like, no way these guys could lie. They even show you a 0% interest on the mortgage document. I mean, once again, they showed you a contract which stated 0% interest on the mortgage document after all, right? How can it not be halal? Well, there's a very easy way to find out if you ask the right questions and call them out on it. And this is exactly why I made the video Diminishing Musharakah versus interest mortgage. And by watching that, inshallah, you're gonna become really, really well versed to how a diminishing musharakah is supposed to be. And you'll easily be able to tell the differences between a regular interest mortgage being sold to you as a halal option. So for this video, I'm only gonna tell you some of the points that I've already elaborated in great detail in my diminishing musharakah versus interest video. Regardless, these guys don't want you knowing these answers, and these guys definitely don't want you asking these questions. They're just gonna straight up ignore you. For a partnership to exist, losses or risk of losses are shared between partners proportionate to their shares in the overall partnership. Without sharing in the loss or the risk of losses, it's not a real partnership. The diminishing Musharakah Halal mortgage, guys, in literal terms, is an optional securitized declining share partnership agreement. Once again, it's not a real partnership if there is no sharing of the losses or at least the risk of losses. So your main question should be to confirm and demand to see the wording on the main contract that states that the losses will be shared proportionately to the equitable ownership, meaning actual ownership in the house of each partner. If you don't see that or can't confirm it, just don't buy into it. Most financial institutions in the Western world will not take equity positions in your properties because that requires taking risk of losses. Think from a non-Muslim's investment perspective for a sec. Why would anyone take risk of losses if they don't have to? They just wouldn't. Second excuse to watch out for is if you're required to take the full risk of losses under the condition or the explanation that, you can take the full profit because you will eventually become the sole shareholder buying out the other partners. That's not a partnership, guys. It's a loan. One partner cannot guarantee the capital of the other partner in this manner. Relevant to this is a third point to hammer down on. If there is any recourse against you for any and all financial losses, including losses not caused by your actions and that you're just not at fault of, once again, goes back to the financier not taking any real equitable ownership positions in the home and not willing to share in any losses or take any risk of losses, ultimately turning the whole damn thing into a guarantee of the financier's invested money. A real diminishing Musharakah Halal mortgage has no mortgage recourse for events where neither of the partners are the cause of losses. Losses then should be shared according to the partnership shares, proportionate to your role in the partnership. Another one is early payment. If you make a full payment buying out the other partner's partnership shares, is there a penalty like 3 months rental rate or rental rate differential? If so, it proves that any profit in this deal is being specifically made on the amount and time the money has been lent out, which is interest. If suddenly you're paying the loan off early, that means that the other party is making less money because they had lent you the money for a specific time. The correct term for those penalties is 3 months interest and interest rate differential penalties. So check this out. Story time, guys. During a meeting with a top member of one of these fake halal mortgage companies, I once asked how the partnership of the lender was registered at land titles in their halal mortgage process. His words: by the security registered against the property. That's like saying that rahan, the concept of rahan, which is security, an actual partnership where you're saying that, okay, I own this property with so-and-so. If there's any losses, then, we share proportionately. And if there's any profit, then we can share in those profits according to either the partnership shares or whatever we agree on, is the exact same thing as security registered. It's just not. So I won't spend too much time on this point. Once again, the main video is the diminishing Musharakah versus interest mortgage. You guys can watch that for details. Bottom line is that's just not right at all. If you're given this sort of explanation, 100% expect that you will be signing a Musharakah agreement with a third-party company, which means jack crap. It doesn't mean anything. An interest loan agreement with a well-known bank or credit union, and mortgage documentation giving security to the bank, but not your so-called halal mortgage company, because they're normally registered as a marketing firm. They're not real financial lenders. Means the Musharakah agreement you sign is burnable. You can burn it. It means nothing along with the opinion of any imam or mufti or mosque. Doesn't matter who told you that this process was halal. You have a haram interest mortgage. Just watch out for any of these 8-page diminishing Musharakah agreements. They send it to you, oh, this is our contract. First ask yourself, really? Your contract is 8 freaking pages? Why don't you ask them that, why don't you show me the documents that I'm going to be signing at the closing date? And the stack of papers is a lot thicker, which normally has interest mortgage on it. The diminishing Musharakah cannot work where you're signing an 8-page contract with any marketing firm and then after that a completely separate loan agreement with a conventional bank. You might as well just skip all of this and go straight to the bank if that's what you were going to do. To understand if you already bought or are being sold a fake halal mortgage, you need to do 3 things. First is mindset. Remove your bias of wanting any option marketed to you as halal and as being authentic, especially if it's coming from the mosque or the imam that you respect a lot. No matter how much you may want the easy and familiar option to be halal, it's not. Second is learning the differences between real diminishing partnership halal mortgage versus straight up regular interest mortgage that you can get from down the street. Watch the full video once again. I've said it so many times. If you really want to know if your diminishing Musharakah halal mortgage is halal or the one that you're being sold is halal or haram, watch diminishing Musharakah halal mortgage versus interest mortgage video. It breaks it down very clearly. Third is ask questions. I listed like 15 of them in the description of the video that I just told you about. Please watch that video completely, inshallah. And if it doesn't make sense, watch it 4 times. Please share this video. It may be helpful to someone out there who's considering getting a halal mortgage, so they don't end up getting fooled. Like and subscribe, hit the notification bell icon to be notified of future upcoming videos, inshallah. May Allah Azza wa Jal reward you. Until the next one, Assalamu alaikum wa rahmatullahi wa barakatuhu.